WatchGuard Capital. Invest your time wisely.
Hi there, I'm Stephen with WatchGuard Capital, and this is part one of a three-part series on the tax gap. According to the United States Department of the Treasury, the tax gap is the difference between the taxes that are owed to the U.S. government and the taxes that are actually collected. The gross tax gap for 2019 was estimated to be $600 billion, which is a ton of money. And on that note, throughout this video, I'll be referencing the gross tax gap, not the net gap, because most of the charts provided in the reports are based on the gross amounts. This video is part of my project on solving the national debt problem that I've been working on for over 2 years now. So far, I've come up with and made videos on how we need to cut and cap tax deductions, stop rolling debt forward indefinitely, add some real assets to Social Security, a reminder that stimulus now is debt later, a review of the National Guard pension system and how it's way more sustainable than active duty, a complete review of our estate tax code, a review of a $3.6 trillion idea and how it could have been used to pay unfunded veteran benefits that we said no thanks to, and how improving the military retirement fund could improve our national security. But without further ado, this is what the hell is the tax gap and who stole $600 billion? So if you go to this link and you pull the IRS's 2001 tax gap report, these are the charts you'll get. And the first one you'll see is this one that looks like this. The first thing to notice is that the tax gap is $345 billion, meaning that Americans did not pay the IRS $345 billion in taxes they should have. To give you an appreciation of how much $345 billion was in 2001, this is the financial report of the United States government for that year. And on page 48, you can see the net cost of all the departments and programs for the year. If we move over Social Security and Medicare because they have dedicated revenue sources, Defense and Veterans Affairs because we spend an astronomical amount on them, the Department of the Treasury and the interest it pays on debt, and the Agency for International Development, everything remaining on this side is equal to $345 billion. The same as the amount that Americans shirked paying the IRS in 2001. So the tax gap was equivalent to the Departments of Agriculture, Commerce, Education, Energy, Housing and Urban Development, Interior, Justice, Labor, State, Transportation, EPA, FEMA, GSA, NASA, NSF, U.S. Nuclear Regulatory Commission, OPM, SBA, the Export-Import Bank of the United States, the FCC, the FDIC, the NCUA, the Pension Benefit Guaranty Corporation, Railroad Retirement Board, Tennessee Valley Authority, United States Postal Service, and all other entities combined. So the tax gap is absolutely massive. It's comprised of three main parts. Non-filing, which is people who just don't file their taxes at all, which was $27 billion. Underpayment, which are people who file their taxes but then actually don't pay the government the taxes they owe, which was $33 billion. And underreporting, which is by far the biggest category at $285 billion. Corporations underreporting income cost the government $30 billion in taxes, and individuals underreporting income cost the government $197 billion in taxes, the largest category. That's probably why the second table provided is the individual income tax underreporting gap estimates. The first column is the category of income, the second column is the number of dollars that were not paid to the United States government, and the third column is the net misreporting percentage, the amount of income or offset misreported divided by the amount that should have been reported. Let's take wages, salaries, and tips, for example. Because Americans underreported wages, salaries, and tips, the government lost out on $10 billion of potential tax revenue, which was 1% of the taxes due on wages, salaries, and tips. So 99% of the taxes due on this category of income were paid, which was $990 billion in taxes. You can find the total amount that was due by dividing the tax gap by the amount of the net misreporting percentage. Let's look at farm income next, which had the worst net misreporting percentage of 72%, which means only 28% of taxes due on this category of income were collected. Because of unreporting of farm income, the government lost out on $6 billion of potential tax revenue, and only collected $2.3 billion of tax revenue from this category of income. Usually I would do a deep dive on this table at this point, but we have a lot more recent reports to do that with, so I'll hold off on doing that for now. This was the third chart that was provided in the 2001 tax gap report. And what it shows is extremely interesting. Income that is subject to substantial information reporting and withholding, like wages and salaries that have mandatory withholding and W-2s that are sent directly to the IRS at the end of the year, had incredibly low rates of underreported income. Income subject to substantial information reporting, but not the mandatory withholding part, like interest paid on a savings account reported on a 1099 interest form, that is directly sent to the IRS, still had very low rates of underreported income. Income subject to some reporting, but no mandatory withholding, like partnership income, had a net misreporting percentage that was about 7 times higher than people earning income from a job that reported those earnings on a W-2 at the end of the year. But those net misreporting percentages don't even compare to that of income subject to little or no information reporting, like rental income and proprietor small business income, which had an absolutely horrid net misreporting rate of 53.9% in 2001, which means more taxes were not paid on this type of income than that were paid, which blows my mind. And this chart clearly shows that as it gets easier for Americans to illegally evade taxes, they absolutely do. Let's look at that chart one more time. The first category of income is substantial reporting and withholding, like wages and salaries. $917 billion were due in taxes on that type of income. $11 billion or 1.2% was not paid. $906 billion or 98.8% was paid. So for every $100 in taxes due on this category of income, $98.80 was paid, $1.20 was not. The second category of income was substantial information reporting but no withholding, like pensions, dividends, interest, and Social Security benefits. $200 billion in taxes were due on that type of income. $9 billion or 4.5% was not paid. $191 billion or 95.5% was paid. So for every $100 in taxes due on this category of income, $95.50 was paid, $4.50 was not paid. The third category of income was some information reporting and no withholding, like deductions, exemptions, partnership and S-corp income, and capital gains. $593 billion were due in taxes on that type of income. $51 billion or 8.6% was not paid. $542 billion or 91.4% was paid. So for every $100 in taxes due on this category of income, $91.40 was paid, $8.60 was not paid. The fourth category of income was little or no information reporting and no withholding, like proprietor income, rental income, royalties, small business sales, and adjustments. $204 billion were due in taxes on that type of income. $110 billion or 53.9% was not paid. $94 billion or 46.1% was paid. So for every $100 in taxes due on that category of income, $46.10 was paid, $53.90 was not paid. In part 3 of this series, I'll be making some recommendations to reduce the tax gap to help solve the national debt issue, and it'll make sense to carry some of the reporting and withholding guidelines from this type of income with a 98.8% collection efficiency rate to this type of income that only has a 46.1% collection efficiency rate. But for now, let's press. The next tax gap report the IRS would complete was in 2006. The tax gap, or the amount illegally not paid to the government, increased to $450 billion, $105 billion more than in 2001. Non-filing estimates grew by about $1 billion, underpayments by $13 billion, and underreporting by $91 billion. So the problem got bigger. The individual income component underreporting table was not provided in the 2006 report. It was replaced by this one. But the main source of unpaid taxes is from the same category, underreporting income, which cost the government $376 billion in tax revenue, $235 billion in lost revenue from individuals underreporting income, and $67 billion in lost tax revenue from corporations underreporting income. So this chart is the same chart that we reviewed from the 2001 report that shows the net misreporting percentage by income by information reporting and withholding requirements. In the substantial information reporting and withholding category, which is normal wages and salaries reported on W-2s, the misreporting rate actually decreased and improved by 0.2%, and there was no change in the $11 billion in underpaid taxes from the 2001 report. Compliance was still around 99%, misreporting a mere 1%. In the income subject to substantial information reporting but no withholding category, like pensions, dividends, interest, and Social Security benefits, underreporting income got worse between 2001 and 2006, and the misreporting percentage rate grew by 3.5% up to 8%, which cost the government another $3 billion in tax revenue, or $12 billion total from this type of income. Compliance dropped to 92% from 95.5% as the net misreporting percentage grew. In the income subject to some information reporting but no withholding category, like deductions, exemptions, partnership, S-corp income, and capital gains, underreporting income also got worse between 2001 and 2006, and the misreporting percentage rate grew by 2.4% up to 11%, which cost the government another $13 billion in tax revenue, or $64 billion in total from this type of income. Compliance was 91.4%, but dropped down to 89% in 2006, as the net misreporting rate grew to 11%. In the income subject to little or no information reporting and no withholding category, like proprietor income, rental income, royalties, small business sales, and adjustments, underreporting income also got worse between 2001 and 2006, and the misreporting percentage rate grew by 2.1%, up to an even more horrid rate of 56%, which costs the government another $10 billion in tax revenue, or $120 billion total from this type of income. Compliance was 46.1%, but dropped down to 44% as the net misreporting percentage grew. So the tax gap problem absolutely got worse in 2006, but it wasn't because of Americans underreporting their wages and salaries, which are reported on W-2s. It was from all other sources of income that have less reporting and withholding requirements. The next tax gap report the IRS would produce was for the 2008 to 2010 timeframe. For the first time, the report covered a 3-year average, not a single year, so the following information is for 2008, 2009, and 2010. The tax gap, or the amount of unpaid taxes, grew to $458 billion on average for those years, or $1,374 billion over that time span. Here's the component chart from that report, but more interestingly, here's the net misreporting percentage chart. The wages and salaries net misreporting rate didn't change, and it still has an outstanding 99% compliance rate. The pensions, dividends, interest, and Social Security benefits net misreporting percentage improved, so the compliance rate increased to 93%, and the non-compliance rate dropped to 7%. The deductions, partnership, S-corp, and capital gains net misreporting percentage got worse by 8%, so the compliance rate dropped to 81%, which means 1 in every $5 of tax due on these types of income wasn't paid. And finally, somehow the proprietor, rental, small business sales, and adjustment net misreporting percentage got even worse, so 63% of tax revenue from this source of income is not being paid, which means the compliance rate dropped to 37% on these sources of income. Which also means individuals earning these types of income are paying higher tax rates than necessary because of the fraud that is occurring here. The last and most recent tax gap report the IRS completed was for the 2011 to 2013 time period. The report sticks to the 3-year average format, so the following information is for 2011, 2012, and 2013. The tax gap was estimated to be $441 billion on average for those years, or $1,323 billion over that time frame. Here's the component chart from that report, and here's the net misreporting percentage chart. Wages and salaries didn't budge, still an outstanding 99% compliance rate. The pensions, dividends, interest, and Social Security benefit compliance rate improved again to 95%. The non-compliance rate dropped to 5%, which was what it was in 2001. The deductions, partnership, S-corp, and capital gains net misreporting percentage got slightly better and dropped to 17%, about double what it was in 2001. The proprietor, rental income, small business sales, and adjustments net misreporting percentage improved to 55%, so just over half the taxes that were due on this type of income were not paid, just slightly worse than the 2001 rate. And thus, the trend between 2001 to 2013 has been very consistent. The IRS has released 2019 tax gap projections, but these numbers are not official yet. The 2019 tax gap is projected to have been between $584 and $630 billion. The net misreporting percentages for the different types of income are still in line with what they have been historically. What's new in the 2019 report is that for the first time, the IRS referenced this distribution of tax gap table by Americans based on their income rankings. This is the bottom 10th percentile of American income earners, this is the 10th to 20th percentile of American income earners, this is the 20th to 30th percentile, and so forth and so on. So if we take the estimated $584 billion 2019 tax gap and multiply it by these distribution percentages, we find out what Americans are not paying what amount of taxes by income percentile ranking. But this table doesn't really show what is happening, so I translated it into visuals. The bottom 20% of Americans accounted for $5 billion of unpaid taxes in 2019, the middle 20% of Americans for $36 billion in unpaid taxes in 2019, and the top 20% for $449 billion in unpaid taxes in 2019. In part 2, I'll take a much deeper dive into the distribution of the tax gap and show who has been stealing billions of dollars from the government every year and how that impacted national debt over the last 20 years. In part 3, I'll recommend fixes on how to close the tax gap that will help reduce fraud, which is always a good thing. Hit subscribe to be notified when parts 2 and 3 are released. Share this video and leave a comment to let me know somebody watched it, because the energy required to make these videos is insane. I'm Stephen Plew with WatchGuard Capital, and until next time, my friend, invest your time wisely.